Well, good afternoon and welcome investors to our, once again, fairly frigid edition of Bull Sessions. My name is Mark Robertson. I'm joined here by my colleague, Ken Kavula. We're all trying to stay warm in Michigan. How are you doing, sir?
I'm doing just fine. I'm just looking at this picture and I'm suggesting we trade the slides quickly here, okay?
Now, what would be the fun in that? Now, I mean, this is a little bit of celebration of the fact that the Detroit Lions are in the NFC Championship game this weekend. And But once again, our invitations to Davos got lost in the mail, Ken. So this this really is our only alternative. So no, this is actually something that happens at the tailgates for Detroit Lions. Even when the thermometer approaches zero outside, they roll up this hot tub, and it's quite a tailgate celebration. So I just thought, hey, what the heck? Um, be an interesting place to do a broadcast from.
Well, these wins for the Lions coming on top of the Michigan National Championship certainly have been good for the state of Michigan, I'll tell you.
It has been fun. I've been a Detroit Lions fan my entire life, even though I grew up in Illinois, and they haven't won a thing since I was born. So that puts a look. I'm not kidding.
It's
The,
almost like being a Browns fan, Mark, okay?
very, very close. In fact, you go back 66 plus years, and the Lions and the Browns used to battle it out for the championship.
Oh, the Lions and the Browns used to be just the fiercest of rivals when they were in the same division of the league when the Browns first became part of the National Football League. Yeah, so
All
very
right,
interesting.
on to some investing. We're going to talk a little bit about special dividends and then talk about the Buttonwood portfolio and have a little bit of fun with some beginning investing themes. But we'll kiss the hot tub goodbye for a while, Ken.
Okay, great.
Here is our slide. If you need any warming up out there, people, Portillo's is a great selection. This is our weekly reminder that Portillo's is not a sponsor of this program, but they should be.
We went and looked for the Portillo's, Mark, that was supposed to be open in Livonia. It's still under construction.
Under
So
construction, yep.
I was not able to actually get a Portillo's when we went there this last
Well,
weekend.
then your moment of ecstasy has been just deferred a few months.
I'm going to have to wait and see. They wanted to send me all the way to Sterling Heights. Evidently, there's a Portillo's in Sterling Heights.
That's not far from us here. Close
Well,
enough.
there you go, and get your fix down there, okay?
All right, here's our weekly disclaimer. Most of you in the audience, a lot of very familiar names. Welcome back. Good to see you. No investment recommendation is intended. Please take this for what it is. It's an educational demonstration. We do this stuff to illustrate and demonstrate the techniques, the methods, the policies, the philosophies of the modern investment club movement. So we will interpret away. The reason we do this is really quite simple. The track record for over 8 decades is quite good. So we want to basically borrow and share anything that seems to work well for a long-term investor. So that's what we're doing here today. That's what we do all the time. But please do your own homework before making a decision about any particular investment. If we hold stocks in our own portfolios, we will try to remember to disclose that. But again, we know that you're smart enough to do your own thing, and we're certainly not your boss. So a week from today, we will have our January roundtable. That's our monthly webcast, generally the last Tuesday of every month, 8:30 Eastern time. And we've been doing it since 2010. The rate of return on the roundtable tracking portfolio has now reached 16.4%, now beating the market by 5.1 or 5.2 percentage points since 2010. So we share some fairly decent ideas from time to time. Again, that's a week from today. If you'd like to be added to a roundtable reminder list via email, please get in touch with nkavula1@comcast.net. And you can accomplish that. If you have any follow-up questions or suggestions for future stuff, our 2 email addresses are at the bottom there. Anything else, Ken?
Nope, sounds good, Mark. We've been getting a lot of requests for additions to our guest list, so Natalie's probably adding 2 or 3 names a day now, so we're very pleased about that. Keep them coming, folks. We'll add anybody to that list that wants to listen to what we're doing.
All right, I moved up our slide. This is what we're trying to do, and we're going to demonstrate that here with a quick moment of recognition. And I just wanted everybody to know that that permanent link should take you to the bull sessions. There's 48 sessions to go for this year, so you can sign up for as many as you like, but that is a permanent link which should get you there. Did have some operating difficulty this weekend for some reason, and I think I solved it, but if we didn't, let me know. We certainly will. All right. I thought this was a pretty cool moment. This is a actual piece of paper that Sean Mace actually shared. It wasn't actually Sean or his family, but it was a situation where somebody had found this trade confirmation from Charles Schwab. It's funny, we were just talking about how much it cost to do a Schwab transaction in the past. You can see it right there on the receipt or the trade confirmation. But this is the purchase of 500 shares of Ross Stores back in 1988. I just think that that is a cool slip of paper. I've been pointing out to people that it's denominated in pieces of 8. So I just think that it's just a really interesting thing to play with. See the 7 5/8 right here. What did you think when you saw it, Ken?
Well, I just, for everybody that's a novice investor or even an intermediate investor, Schwab was known as a discount broker. So that's $73.88 to make that trade. That's probably the best price you were going to be able to get from anybody at that particular time. My wife and I have been investing since 1987. So this just is real close to the year we started investing. Natalie has given me a sheet of paper here, Mark, and our first stock that we bought was Dollar General, and she's showing me the 4 stocks that she had researched during that time before
Uh-huh.
we settled on Dollar General. One was Family Dollar, one
Okay.
was TJ Maxx, and one was Ross Stores. So it had made our
Well,
radar even back then as know nothings to the stock market.
well,
So
you would have done pretty good just buying all 4 of those.
I just could have bought any one of them and just
Yeah.
held on. A couple of them have come and gone from the market, but
Uh-huh.
for the most part, they're this kind of a discount slash neighborhood store is a very impressive kind of investment to have made back then.
So again, this document was found by some son or daughter going through parents' investing records or whatever. I don't know if it was a matter of estate type stuff or whatever, but they found that this was actually still an active position. And we asked the question out there as homework, how much is just short of $4,000, 38,1250 worth? Because these people hung on to it, and that answer is right here. And Ken confessed that he read that and saw that as $2,867. Um, it's not $2,867. That is just south of $3 million. And I just thought it was a really nice temporary insertion into our magnificent stocks at the top of our performance perspectives. And just to point out that Ross Stores has generated, again, that's not an extremely sexy or extravagant return, but it's a powerful one for sure. And again, it just goes to demonstrate the huge difference that a percentage point or two, or maybe a few more than that, can make over an extended period of time.
And coupled with the power of compounding, Mark, the
Mm-hmm.
having enough time to really allow that stock to compound. This is from '88, so
Yep. So
really nice story.
I just think it's a wonderful demonstration. I have similar stories from people that I've worked with over the years that discovered these types of things that they barely even knew that they had stuck in the bottom of some desk drawer someplace or whatever. So good stuff. So
I
Ross
have
Stores.
four shares of Microsoft, Mark, that we've held since '87. and we've added to it over the years and everything, but it has a similar kind of relative return to it from 1987 onward. It's not as large as this holding. Like I said, it was 4 shares back then, but we held on to it and added to it, and it's worth a tidy sum today.
Yeah, I suspect it would probably pay for that house you built at this point.
It more than pays for that house that we built.
Yeah, that's just
I was going to make a joke that there was no AI or drones required to get that return, and I wanted to add one more to the list. I had to check. They have no e-commerce. You cannot go to rossstores.com and buy stuff. They'll point you to the stores.
no kidding.
No kidding. That was something that Bed Bath & Beyond, the founders, cited as the beginning of their downfall, as they didn't catch on to that. But yeah, I see no e-commerce capability. You can sign up for the credit card, but no, they point you to the stores. It changes too much.
Interesting, because Bed Bath & Beyond is now almost 100% online for what's
Right.
remaining of it. Interesting.
Yeah.
In here, I just thought this was kind of fascinating. I don't think you can find this type of a picture for very many companies out there. I mean, this goes all the way back to that purchase time frame. And I think it also points out how disruptive this was. And that, of course, is the pandemic, basically kicking this thing in the midsection for a year or so.
Well, and
But
if Matt's right, and there's no reason not to believe Matt being right, then that basically closed down the entire business at one point during the pandemic.
yeah,
There was no income, no revenue of any kind.
yeah, they probably were down to 20% or so of their locations still remaining in operation for
Yeah,
a big part of that year.
yeah.
Good stuff. So there's an incredible long-term track record of steady growth. And I just wanted to throw this one in here to demonstrate it's not just the top line growth, but this is about as stellar an achievement of steady profitability that I've seen in a long time also. That's just profitability over time, barely fluctuating with that one.
And Mark, you have to give them kudos for the fact that this is a retailer. To see a retailer with margins at that percentage is really exceptional in my head, at least.
Yeah, and then over here, this is just for context. How does that 13.9 compare to some of the others? And you can see why Ken drools a little bit over Lulu. Pretty high returns, and they also are fairly consistent over the trailing 10-year period. Interesting
Well, the
stuff.
demographic.
Oh,
I
Kim
can
has
say
joined
the
us.
Yeah,
Okay.
I've been here. I've kind of had microphone issues, but as a consistent shopper at Ross for Less versus Lulu, I really like the bargain prices as being a stock picker. Also, the Lululemon's $100 for a pair of leggings compared to Ross for Less for $15-20 is, I just can't get past it. And everything I've read and know about Ross for Less, their buyers for their markets are very consistent on what the locations have the people buy there. Because
Sure.
I can go to a different Ross for Less within a 20-mile difference, and you'll find totally different stuff.
Mm-hmm.
That's a really a strategic challenge that they appear to have mastered over the years, and just we have to tip our hat in their general direction, I think.
Absolutely.
All right. Well, here's a fairly interesting slide, and Ken, I think it's I actually received a letter this past weekend thanking us for the Getting Started series, and basically they just offered this as something we might think about for the next time or our next edition for beginning investors. And I mean, it's a heavy slide, but the point to be made, and the individual is basically reaching out to us and saying, you guys have kind of cracked this code a little bit. And when he says you guys, he means not only you and me, Ken, but everybody around us. When you think about what the average beginning investor is faced with, you can see that insert from Value Line, a lot of numbers, and then down below, what you used to be able to, you remember the days with newsprint and actually looking up stock prices in the newspaper? I mean, who does
Yep.
that anymore? Do you still do that?
No, absolutely not. But I can remember these charts. I can remember sitting around a kitchen table on a monthly basis and looking for numbers and reading them to Natalie, who would then record them on a spreadsheet.
I know it. I mean, I can remember going to the coffee shop to do Barron's on Saturday morning, and then what I was doing was looking up the prices for the investment club meeting. You know,
Yeah.
some of the time, just amazing when you think about that. And again, this person is basically just saying, you know, uh, we need to talk about the fact that the price of a company doesn't tell you much. It doesn't really tell you how expensive or attractive it is, you know, to a long-term investor. And the point that the individual is making here is, you know, you look at Google at 144.24, sounds pretty expensive, but it really isn't. And when you break down what we do, you kind of take the price out of it, put all stocks on a very common playing ground, very common ground, and search for the opportunities in terms of the return. And his point was, uh, everybody understands when they go shopping for a car, interest rates with respect to the loan that they take on their auto, or certainly mortgage rates on a house. So people understand percents, and we deal in percents here. Um, just that simple. And what I find kind of fascinating about the insert is down below here, this $4 stock in the table is by far the most expensive stock on this page. And I don't care what time frame that's from. It's true.
I think, Mark, the only time that the price of a stock can tell you anything is when that price begins to move close to a penny. When it moves down into the $1 or $2 range, I think that does tell you a little bit about the perceived quality of the company. I think the market is telling you that this is not something that's up straight and parallel and maybe can be held for the next 10 years. I think it's kind of a warning signal, but that's the only time when I think price has any validity in or when it should enter the picture as far as, is this an expensive or is this a cheap stock?
So I guess we take this for what it's worth and just consider it the next time around when we develop a presentation for beginners. Just recognize that they're faced with that situation on the left, and it's real. I mean, I've dealt, you know, one-on-one with people that are faced with this illustration on the left, and especially for people who have a little bit of reluctance or phobia of math and numbers, they practically lose consciousness over there. And we do offer an alternative. We'll look at some of those alternatives here today in this session.
Well, and I think what's so true, Mark, is that we have to reassure novice investors. We have to reassure people that aren't part of the investing community at this point that you don't need to understand tables like this to begin with. You can find much more easy to understand places to begin to study stocks. You don't, again, you don't read Dostoevsky before you read Dick and Jane, and let's focus on Dick and Jane to start with.
Sounds good. All right, pressing on. Here is our weekly chart. Really no changes. You can see the kind of little bit of a freeze we've been through, or a little bit of a sag in January as we start the next quarterly bar chart there. But again, that's just the market versus time. In the green bars, the blue line is the line of reasonable expectations for that basket of stocks, known as the value line investment survey universe of 1,700 stocks. And the red and yellow or orangish lines is basically the return forecast over time. And we're just saying that right now the return forecast for the average stock is in the 9 to 10% range. And that's basically one of the things that guides us as we go shopping for stocks. Anything else on this one, Ken?
Well, and just to remind folks that line of reasonable expectation, that blue line right there, This is all of the above investing. That means there's small companies, medium-sized companies, large companies. It's a fairly large sample. And that blue line is probably representing somewhere up around 11% growth.
Yep. All right. Here's our Groundhog Challenge moment. We've only got a couple weeks to go. There's not a whole lot of moving around going on these days. Again, just a reminder that the ones color-coded in orange happen to have Ardelyx in the portfolio, and that's been pretty good to many of us. But Ann is hanging on to the leadership position for now, and she's only got a few days to go, so we'll see. I think Kim actually has moved into the number 2 position this afternoon.
Now, Mark, the official end is it at 4 o'clock on the 2nd, or is it 4 o'clock on the 1st?
You know, that's a question I would not have stumbled over years ago, but you know what? Prices change now between the close on the 1st and the open on the 2nd. I guess I got to look back and see what we said, but I would be inclined to say that it literally is the opening of the stock market on the 2nd of February.
Okay,
I don't know.
that makes sense.
I'll have a definitive answer next week.
Okay.
After taking a look at the rules and what we said.
It won't depend on how number 4 on the list does in the different decisions, will it?
Well, that's always a factor, Ken, that has to be considered.
You know, Ken, it may not just be number 4. It could be number 3 and 4 together.
Well, Kim, all I'm going to tell you is watch out that he's one behind you, okay? Because as we get closer to the 2nd, it's just amazing how those numbers reverse themselves up in there. So just watch it, Kim.
It's just frightening. I mean,
Thrilled to be in the top 10.
I will tell you that the Space Coast group out of Florida, number 31, they are 2-time defending group champions, and they have actually moved up from 46th to 31st, so they're not giving up yet. But I will say the Orange County group, that's a bunch of, you would know them all, Ken. They're all friends over the years, and they are the champions from 3 years ago. So they are trying to become a repeat champion in the group category, and looks like they're in pretty good shape. That group out of Dallas is not too far behind, but it would take a pretty strong run. Dare I say, a Texas-sized rally.
Well, that you never count the cool kids out from Michigan, Mark, and you never count the Wolves out from Michigan either. So they're both in the top, moving up, big time. That's 34 to 27 for the Wolves. That's a nice move as well.
Yep. All right. So the invitations are already. The invitations haven't gone out, but we are receiving submissions already. So it is that time of year when you should curl up with your favorite beverage by the fireplace and consider joining in this contest. If you're not familiar with it, I will be publishing the rules. We'll go over them next week, but it's basically select a minimum of 5 stocks, and your $1 million groundhog dollars are evenly distributed amongst your selections. So a minimum of 5, a maximum of 20. And as we point out every year, I guarantee you that the top 10 there all chose 5, 6, or 7 stocks, with very few exceptions. And generally, if you want to win it, you want to minimize your number of selections. Plus, it's just easier to keep track of. So, good stuff. Good luck, everybody. And don't be too surprised when Mark has a miraculous rally here. All right, let's talk this one.
Time will tell on all things.
He actually is pretty honest, folks. So we're just kidding. We're just kidding, okay?
All right, Ken, I wanted to reinforce something that you brought up last week. So would you care to take us through a discussion of how wonderful you've discovered special dividends to be?
Well, I didn't discover it just last week. I've always known that special dividends can make a huge amount of difference, but when our treasurer at our last model club meeting, we have 200 shares of Costco. And when he announced the amount of money that we had gotten in a single check from that special dividend, that club, which is never very quiet, the room went absolutely silent and then broke into conversation in about 4 seconds. You know the kind of thing I'm talking about. And I think 3/4 of the folks were just really taken aback by Costco's ability to give out these large dividends and to kind of just pull a surprise on you without really telling you very much about them.
Yeah, and
It was a $15 a dividend share.
$15.
So,
We'll look at the details of it,
yeah,
but it
yeah.
is a wonderful thing, and it used to be more common. It's actually become quite rare. And in fact, when Tom O'Hara first got started investing back in the 40s and 50s, it was relatively common, and it was a big factor in how they went hunting for stocks. So
I
things
think
have
it's
changed a little
interesting,
bit.
Mark, that even in the Monopoly games, there's a card, one of the cards that you turn over at random when you go around the Monopoly board, and one of those cards says "Special Dividend Declared."
There you go.
Taking so much money, so it has been around for a lot of years.
Yep. So good stuff. So here's just a quick acknowledgement of the Costco dividend. Again, as Ken said, $15 per share and 50% larger. We'll look at the specifics, but the Motley Fool came out with this article on it. Here's a look at Costco over the years. And again, we've talked about this a number of times at our roundtables. Costco was chosen in September 2010 by Hugh. And the amount originally invested in Costco was $1,000. That's now up to this. But that doesn't include the special dividends. Believe it or not, that report on performance doesn't. The 5 special dividends are shown as line items in our cash flow. And you can see that $15 one right here, Ken. But what is kind of fascinating to me is that the special dividends have nearly offset the original $1,000 purchase of this company for the roundtable. I mean, it's just amazing. I mean, the special dividends do not show up in the regular dividend field here. So you got to watch for them. This is actually from the notes at the bottom of the value line page. So they're not there. They're not in this line. So when you're looking at a company that has paid them in the past, you actually have to go digging for them.
Yeah, Costco is paying a decent dividend, a regular quarterly dividend, most recently of $3.84 a share. So this is over and above that $3.84. It was just $15 times how many shares you own, and they sent you a check. It was as simple as that.
Yep.
It's pretty interesting when I also look at that for me is it is 2012, 15, 17, 20, and 23. It's like every 2 to 3 years they pay out the special dividend. That's what I noticed right off the bat.
Mm-hmm.
Four times it's 3 years apart, and only once it was 2 years apart.
Yeah, they kind of telegraph it a little bit. You get some hints from management that something's coming, but the actual date and the actual amount is really kind of guarded. I think they kind of like to surprise people, and you don't really know when it's going to happen, and you don't know how much it's going to be. So it's a very pleasant surprise when it happens.
So again, it's just something that's a little bit hidden, especially for a beginning investor, but something to be aware of. Good stuff. All right, let's switch to our Buttonwood portfolio. Ken, if you're ready, this is just a reminder that we're just trying to stick to the general guidelines for any portfolio. We think this is good advice for virtually any investment club or any individual brokerage account. Again, enough core with permission for an experienced investor to do some of this stuff. But for inexperienced, I would suggest you stick to the core type companies, the Ross stores out there. Find the next Ross stores. And again, here's as Ken was saying, all of the above investing makes it you're shopping amongst the small, medium, and large size companies. And again, this is just our general guidelines for portfolio design and ultimately maintenance. Anything you'd like to add, sir?
No, I think we can move on here. This is a nice model for us to put together. I like the history you've been pulling together, Mark, and some of the quotes that go with it.
Yep. All right. So one of the things that's kind of fascinating, we're going to see a couple things here as we look at Buttonwood. it's been a while since I've seen the type of correspondence that you receive from a brokerage firm when you have a relatively new account. And in this case, Robinhood is no different. They are sending notes to us as if we're brand new to this stuff, and just a tiny bone to pick with this one. If they're talking about timing the market, we will get into price alerts as we deal with them as a future topic. But I just love this quote. I have used it probably 100 times from our friend Mary Farrell. Mary Farrell used to be a contributor to many of the regional and individual chapter investor fairs out there, and she is renowned for being one of, and I'm really dating myself here, Louis Rukeyser's elves. If you're a millennial and you're out there in the audience, you might want to Google Lou Rukeyser and watch a few YouTubes to see what you missed.
Got to figure out how to spell it first, though, Mark. Okay.
Rukeyser,
Yeah.
Rukeyser. Google it and have some fun. Hugh McManus has shared a number of great Rukeyser videos in the manifest forum if you want to search there. But Mary's reminder just simply that, and again, it goes back to that Ross Stores example. Time is a very blessed thing when it comes to compounding.
I really think that the alert that they're talking about might be a little bit more valid if they were talking about watching revenues and watching earnings as well as watching price.
Yeah, maybe we'll have some dialogue with them along those lines at some point.
Yeah.
But we will cover that in greater detail. So here's the portfolio. It is online in a public spot. You can use that link to get to it if you want to follow along. We started it with 3 shares of Vanguard Growth just as a foundational position that will go away as we build out the stocks. As for right now, we're putting $162.50 into each one. And we have 2 nominations here that we want to talk about for the next few minutes, ACLS Technologies and Forward Air. Any thoughts on what you see so far, Ken?
Well, before we get to ACLS and Forward Air, Mark, I'm not understanding the Visa entry.
You know what? I didn't understand it either, and it was an interesting surprise. It was actually just given to us by Robinhood. Approximately $5 worth of a company, and you could pick from the companies, and I just grabbed Visa because I think Visa is a high probability addition to this portfolio.
Okay.
And this was just simply a gratuity. It's real. It's in our account, real dollars.
Okay, I understand exactly where it's coming from now. It doesn't make a lot of sense to me, but I guess a lot of brokers will give you an incentive to move your portfolio into their brokerage firm. I noticed that we have one broker that's willing to give you 1% of whatever you move now. If you move 10 million, he's going to give you $1 million. So, or no, maybe it's 100 million, he's going to give you $1 million. So, you know, do you have an extra 100 million lying around anywhere, Mark? Or
only if I'd have bought enough Ross Stores back in 1988.
Okay.
No, this is.
I really like both of these companies. I actually own in 2 clubs that I belong to, Forward Air. I also own it in my wife's IRA. I like that company a lot. I've owned it for a long time. ACLS is relatively new to my list of companies that I've discovered. I'm not particularly fond, Mark, of the growth rate, the revenue growth rate for Forward Air. I'm thinking that we can probably do better of the 2 because of the revenue growth rate. I would lean towards putting the stock into ACLS myself.
Mm-hmm. So would I, but it's worth the story. I mean, Forward Air is a story of maturity and some pretty good consistency too. But you're right. If it's definitely a consideration as we go forward. So anyhow, I was surprised, and it's interesting to see the $5 show up like that. One last little tidbit, just a bit of housekeeping. We talk about doing this all the time. One of the better performing small company mutual funds out there is this one. It is on your screen here. And again, we just periodically take a look for things that they are buying or showing interest in. And you can see that they basically tapped into energy recovery, Inari, medical, and lo and behold, Shockwave during the second half of 2023. I would be interested in taking a look at any activity that they've had when the next report comes out, because this is through September. We should be seeing December pretty soon. But Shockwave is one that probably bubbles to the top of our search list here at Buttonwood also. Okay, so we will be back to take a look at that. I was kind of hoping to discover a slam dunk opportunity. It's not, I don't think it's quite there yet. Shockwave
This
might be
is
okay.
not, this Brown Capital is not a, no, it's not. Okay, it's just a small company. It's just a coincidence that so many of the larger holdings are healthcare. Is that it, or is this list picked from the middle of the list
This is
somewhere?
this is just the bottom of their list. I was just looking for stuff that they've
It's the bottom of their list. Okay.
in terms
Okay.
of portfolio weight.
Okay.
So again, it's the number 40, 31 through 39 or whatever, and so it's towards the bottom. Just the ones that have shown recent interest. Notice here that they very rarely do any selling. So there's stuff in their portfolio that goes back decades. So you are looking at the bottom of their list. And again, we're just shopping for things to study more carefully to see if we can't figure out what they see and might trigger some interest in a number of these. Inogen is one that has triggered us over the years. It's been a little disappointing.
I'm curious, Mark. Is Ardelyx in this?
Ardelyx is not in this portfolio.
Okay.
As has tandem diabetes, Mark. That's a stock that I have followed off and on for a couple of years, and it's been a very disappointing, really grand story behind it, but a very disappointing stock performance.
It is interesting to follow a company like this. Again, they've shown pretty good skill here at what they do over the long term, and you can actually listen in on some of their discussion of some of the stock discoveries that they have. So
I think I'll bring this. I think I'll bring this slide to my doctor's office next time I visit my doctor. He was the one that about 3 years ago told me that Inogen was going to revolutionize the practice of medicine for elderly people. So far it hasn't done very much.
I think he's right, but I don't think that they have executed to the level they need to. So
yeah.
Oh well, maybe more on Inogen later. All right, so let's get to our company for this week. One of two companies we'll talk about briefly, and this is interesting because I received 3 independent emails, and that's actually quite a few for the relatively small group that we have here, although we do get a couple hundred people checking in on YouTube. But actually, this stock was brought up by Dean Printy, who's in the audience here, and a couple others, and Nat is also with us. And I don't know if Maria was actually in the segment, Ken, but I couldn't resist reminding you that Maria is over at Fox Business.
I was wondering how she merited the upper corner there, but I see that you just fooling around again. All right.
All right. And this is a company I'm not very familiar with. Now, Dean, I don't know if Dean is willing to come online and basically describe what triggered his interest, but he had mentioned that he might be. We do have an SSG from Dean to cover.
Dean, you're unmuted right now if you want to speak.
Yeah, thank you for having me. I'll be honest with you. I had this on. I heard about this company listening to Fox Business at 3 o'clock with the Clayman countdown or something like that.
Okay.
And like Ken said last week, he said, when I hear something, I jump on to do an SSG, and just to kind of look to see if they're legitimate or not. Well, anyhow, I did that, and I'm like, whoa, where did this company come from? So I didn't find it in the screener. I didn't, I heard about it on the news, and then I said, I'm going to do an SSG and try to do some research on this. And I did do some research, but I will tell you that, and I'm sure you're going to, as slides coming up, you're going to talk a little bit about the company, but it was very high tech, way above my pay rate, we'll say. So what I did is I did find a video, a 36-minute video on their investors' website from January 5th that they participated in something called the Needham Growth Conference. Now, I have no
Right.
idea what that is. And they talk about the company and what's going on with the company. And it's kind of a preliminary, some announcements prior to their earnings call that's coming out in 2 or 3 weeks. And that's really where I learned more about what they do. Their focus is on power, image sensories, and memory. And the take home is this, is I don't really know what they talk about. They talk about something called a Purion ion implanter. I don't know what that is, but let's just call it a widget. And I kind of equate it to this way. These guys make the widgets for the widgets that generate power, memory, and improve performance in these items. And I understand that, a widget to improve widgets, and their focus is, and 60% is on generating power, industrial, EV, and that's what hit home with me. Now that I understand.
Yeah, and I also watched the Needham presentation after you recommended it, Dean, and it is a good review. They get about neck deep in technology, but the one thing I will say is their confidence in their ability to do what is discussed here. In other words, follow your green dotted line. Let's come up here to your SSG, and then we'll back up. Their confidence in this was pretty strong. As they sat there, you basically had 3 of the company executives and a Needham analyst, and they were basically saying that they were pretty confident about Dean's dotted green line. So you want to walk us through what you think you see here, Dean?
I'm sorry, I put a mute back on. Dean, you're unmuted again. Go ahead.
Okay, good. Well, I did some research then through Zacks and Yahoo. I did a value line, and they had, again, this is a small company as far as Better Investing is concerned. So I wasn't shocked when I saw these sales growth anywhere between 15 and 20%. I landed in on, I think I put 18% on that. And earnings per share, I came in at conservatively at 15%. I've since tweaked that to 18 based on what I've researched since. And as of today, it just falls into the buy zone. But that was my reasoning, is I was confident on what I was seeing. And after watching that video from the executives, that I don't think these are out of line.
Okay, so here's a quick look at what Dean is describing. We'll cover a little bit more about it here in a minute, but they do the product and services that they provide are to the people who make integrated circuits or chips, and their landmark thing is what Dean has described as the power, the thing that powers these chips. And again, I can't describe what actually goes on, but it's obviously a crucial element to the production process when it comes to chips. Now notice, Ken, that they made this list, which always attracts our interest. And
Absolutely.
then how about this one? Did you even know that this one existed?
Yeah, we did a dashboard on this one when it came out, Mark.
All right, well, that just shows you how old I'm getting and forgetful. Probably time to see if they've got a 2023 list and see if there's something that we could take a look. So we love the workhorses. These guys are kind of even though they're a small workhorse, they're a workhorse in this industry. This again is what Dean was describing about. They are in the area of doing this manufacturing support for people who make these silicon and silicon carbide devices, many of which go into electric vehicles, but not just EVs. So that's kind of where they're at. When you see who they compete with and in who they actually count as their customers, you'll understand even better. Here's just a quick look, the same way that we look at things in general. What I discovered there was their 2 largest customers are Samsung and SMIC is actually basically a private Chinese company, but they also point out that they serve most of the people on the upper right. And when you break down the semiconductor industry, when it comes to semiconductor manufacturing, you discover that 90% of the chips built in the world are built by the top 20 companies, and they call most of those customers on the right. So you can see the fairly interesting trends that seem to be in place, that they seem to have a lot of confidence in. Again, a quick look at what the analysts think versus Dean's SSG aligns very nicely, somewhere in the mid-teens, and pretty high quality, small, niche company. The other thing that I think is really kind of fascinating to look at is it really demonstrates some early stage company dynamics here. So they came public. You can see that the stock price basically bubbled up to a relative high. When they stumbled here, for whatever reason, notice what happened to the stock price. And that may not seem like a lot, but the stock price went from 74 to 31 as they stumbled. Now, if they actually go back to where their earnings go negative in a fairly early stage company, a lot of times that will really crater the stock price. So you can see that they seem to have moved beyond that. They have a fairly stable situation going forward, and the return forecast is in a pretty good spot. Okay, so we see, again, just confirming some of what Dean had to say. They're definitely in a buy zone with the price down below that $153 level. You can see that the analysts have a very favorable opinion of the company, with the exception of Value Line. Value Line probably has some catching up to do with this still fairly early stage company.
Mark, I have something else.
Yeah, go ahead, Dean.
Yeah, so when I was watching that conference, that video, one of the things that they said is, they said, we talk about AI today. We're all trying to get on and make some money off AI. What does that mean? He said, AI stuff has to be stored, and with that, it generates a huge capacity to store this information. He said AI is a data beast, and what we do, we help these data centers store the data with what they're making with these transistor implants or whatever. And the other thing that he mentioned was, someone said, well, what about China and the development, what they're trying to do? Do you see that as a threat in taking over some of the market share? And they basically said, no, we got 45 years to start on them. And these aren't things that can be harvested from. You can't go out and buy one of their implants and copy it. These are all data driven things that can't be harvested. They can't copy it. So I see it as a larger moat application, I guess is what I'm trying to say.
Absolutely. And in fact, this slide demonstrates also that they have reached, even they're a relatively young and small company, they seem to have reached a fairly decent level or a tendency or characteristic when it comes to the profitability. So that's also attractive, especially in the type of industry that they're in. So, wow, will there be turbulence? Absolutely, but it does look like these guys are in pretty decent shape going forward.
Mark, what are you calling? What's your average PE ratio that you're calling out there? Did I miss it somewhere?
We're going with 16
There it
here.
is, 16.
Let's
Okay.
see what
All right,
Dean,
I got it.
Dean is in that same range. Dean is going with 22.
And also note there that I did cross out 2019, that high 50 and that low 28.
Yeah, that was that moment in the market I pointed out. For early stage company, it does a lot of damage when investors are at least temporarily disappointed. But yeah, so 16 is seems to be fairly representative without knocking it out of the park. And you can see here's the longer term average, current fairly close to that range.
And Mark, for a company this size, we're very used to seeing graphs that look like 2016 and before that for these very, very small companies. What we really want to see in these small companies are the last 3 or 4 or 5 or 6 years being as consistent as they possibly can. And I'm kind of pleased that that's what I'm seeing on the earnings for this company, and I'm seeing that earnings growth at a really high level. That's it's not going to be able to be maintained, but it's certainly nice while it happens.
Any other questions or comments, anybody?
Could you tell us, Mark, what that reference to applied materials was on the one slide yet?
Yeah, I missed that one. Right, that is their #1 competitor, and that's a deeply respected company in the field, but they're obviously not going head to head across the board with Applied Materials, but that is who they would characterize. This is straight out of their 10K. If you want to understand more about the company, they're doing the same type of thing as Applied Materials, but I don't think that they are going, traditionally head to head with these guys. They're trying to serve a part of that same type of business, but Applied Materials would be considered a competitor. And that's a company that's fairly familiar to many people in our community.
Yep.
Okay. All right. Well, pressing on. So that's the first one to consider. I went shopping for companies that might make some sense to go after. Basically looking for companies starting with an oversold condition. Relative strength index less than 30, less than 20 is even better. You can see that one of them actually qualified at less than 20. And this is just simply my way of working down through the sheet. These areas in orange are just areas where I'm scratching my head. I don't understand when it comes to that entire industry how that's happening, but I'd really like to understand why the projected returns on value are so much higher than the projected annual returns. This is true for many oil and gas companies. And I'm basically just open letter to the audience. It would be nice if we could figure this out, guys, because there's a reason that Warren Buffett and his team are accumulating a huge stake in Occidental. And I think it's barking at that same tree in some way, shape, or form. Humana, going through some tough times, and so you want to take a look at that. Newmont just made an acquisition or a merger of monstrous proportions.
They were just acquired, Mark.
Yeah, so the survivor company is actually the two pieces that are equivalent. So I don't know if they're going to be the surviving entity or they're going to
The surviving entity starts with Newmont, but it's Newmont something else.
Okay, so that's why I just put that there as caution. Maybe give that some time to shake out. And the rest of it, the red boxes are just things which I would be less happy with. And the net result of walking through this, although I did like Duckhorn. I love to do some field research on the Duckhorn portfolio. That's a wine company.
I
Expensive
will
wines.
make the observation, Mark, that in the market right now that's moved up so quickly in the last 3 months and is sailing at record highs and everything, finding companies that are really attractive with RSIs beneath 30 is becoming really quite a challenge.
Yep.
And I wouldn't be adverse to looking at companies with RSIs of 40 or 50 or 60 even. I'm not especially enamored of very many on this particular list right here. I think that in a market like we're experiencing right now, besides companies that are legitimately on sale, I think you get a lot of companies that have been wounded or maybe even mortally wounded that make it to the bottom of these lists right here. So I would be very, very cautious on any of these on this list.
Yeah, some of these are definitely distressed merchandise or damaged goods.
Yep.
And Ken, I did this just for you. The China's blocked out here. That is just the Chinese component of Yum Brands. If you're willing to set your hair on fire out there, it's a worthy study.
Well, I'll tell you that right now all the analysts everywhere I turn are just reinforcing my thoughts about China at the moment. I read quite a treatise on China with the coming population problem that they're going to have. It's not going to be pretty. And if you can learn any lessons from what went on in Japan in the last 20 years, China looks like it's headed right down the exact same road that Japan took, with really overvalued real estate, a consumer class that would rather save than spend, and being very reluctant to provide any direct kind of extra money to the consumer, but rather plowing that money into places where it's going to have to trickle down to the average consumer. That has proved to not be as effective as some of the other ways of jump-starting your economy. Now, you know, because it's controlled by a single person in a single party, they might be able to pull themselves up by their bootstraps. But this whole concept of deflation is something I never really thought of very much. But after some of the reading I've done, I'm thinking deflation is just as nasty as inflation, maybe nastier in a lot of ways.
Yeah, there's a lot of economists that would agree with you, and there was a bunch of articles this morning about the Chinese government injecting, I believe the number is 287 or 278 billion into buying individual stocks to try to boost them up.
The whisper number from Mr. Kramer this morning is 700 billion.
Oh my!
So he says that's what everybody's whispering, that's going to be put into the market. But that's not exactly in my mind at least, that's not exactly the best way to run a stock market.
Well,
I don't know.
I will tell you that I have not been the same since we did that dissertation on the China documentary a year and a half ago. Maybe I'll put that in the notes. If you want to go back and take a look at it, there are just things that I was not aware of. Some of us have actually been burned by companies that didn't really exist and things like that. So, yeah, the China thing is definitely something you want to be careful with. But Duckhorn is interesting, but I'm going to just basically pull these guys to the forefront. Forward Air is a company that has appeared on the best small companies list for years. I think it was near the top of the list for the better part of 10 years. And it's a logistics and freight company. So just a quick look.
I will say that Forward Air, Mark, might be a case of the whole industry being tarred by the same brush, and not a whole lot of a choice being made as to which companies are better than which other ones. So it's I don't mind Forward Air. I just think it's a slow grower. That's all.
Yeah, I mean, you're looking at a growth rate in the 7% range. That's reflected here by what you see. The company has definitely matured to some extent. They have become a true medium-sized company by their growth rate and by their sales that you can see here. Notice that this is trading at pretty much a multi-year high when it comes to the return forecast. I just like the company because they have been so steady in a difficult industry for so long. I mean, many of their peers definitely have more volatility when it comes to their bottom line. Can definitely make a case for the stock price following those earnings, and just a fairly interesting story. And again, it's an industry that's got its challenges, but they are similar to Federal Express with the tack on of they do the partial load services. But again, this is no stranger to us. It's been around for a long time. Go ahead, Ken.
Cynthia is out in our audience, and she's indicating that Forward Air is completing a merger by Friday with a company called Omni. There had been some litigation around the merger, and that's been settled. The merger is going to happen with a lower price tag, she says, and she's just making us aware of the fact that this company is going to change within the week from what it was to something new.
Do we know how the size and revenues for Omni compared to Forward Air?
I wasn't even aware that was going to happen, so I don't have that information. Maybe Cynthia will provide us with something here.
Well, that may have earned me an orange box if I had known that. So.
Okay, Cynthia thinks that Omni is actually a larger company than Forward Air.
Oh my, we'll make it. Wow. Okay. Not aware. Maybe that can often be the explanation for this. Somebody doesn't like the merger. Okay.
Well, and it could be the explanation for the fact that the price on this stock has dropped precipitously in the last, I don't know, 6 weeks or so, 8 weeks.
All right, Ken, are you able to pull up the poll, or do I have to do that?
Let's see
You
if
wanna
I have
try?
any access to it. I have access. And
And
let's pull it up.
it's cooperating this week.
And let's launch it. Here we go. Mark has 4 choices for you tonight, this afternoon. So ACLS by itself, Forward Air by itself, both of them, or neither of them. So give us a vote, okay?
And of course, everyone is welcome to vote. And unlike Dixie Notch, we don't have to disclose.
It's not going to be unanimous, no.
It's not going to be unanimous, and we're not going to read everybody's vote.
All right.
And our audiences are always cooperative.
There we go. We just jumped over 80% voting. I'm going to kind of count to 10, and then I'm going to close the poll. Doesn't cost you anything to declare a vote here, folks. Okay, let's close it and let's share the results. So, Mark, we have a number of people that don't like either one of them, 20%.
Okay.
But we do have 2/3 of the audience that say, let's just buy ACLS for the moment.
Okay, well, we'll do that then. We'll buy $162.50 worth of ACLS and hope that we have stumbled onto the next NVIDIA or this year's NVIDIA story.
And I think that we'd be honest in saying that we certainly don't regard ACLS as a core holding right now.
No, it's new and it's interesting. I think if you take the time to actually read the 10K, and probably something we should just cover as a beginning topic, Ken, just to show what can be learned from a 10K. And let's see what happens with our newest Buttonwood holding. All right. Quick reminder that we do archive all of these sessions on YouTube. You can see our Getting Started series is still there, although I think if you go to the page currently there, it's down a couple slots. But you can still access any of those 3 sessions if you want to refer friends and family to it. And if you'd like to be reminded anytime that new content is added, either a bull session, a roundtable, or any of our educational special editions, hit the subscribe button and we'll let you know. And with that, here's our panoramic slide. I don't know if you've seen this one yet, Ken. That happens to be our good friend, Matt Spielman, who's in the back room answering your questions. And Matt, I'll let you share how pleasant an experience, how wonderful an experience that was.
Well, for this audience, I'll simply say thank you, Green Brick, and thank you, Western Alliance. We are in the almost the exact middle of the Michigan alumni section of the national championship game, which thankfully through the association, tickets were the same price with a throwaway 2-night hotel stay as were upper bowl tickets on the secondary market anyway. But lovely day. We played hooky from school for the afternoon, and he went to school the next day really tired and wore his entire wardrobe of Michigan shirts through the next 2 weeks. So this was his first live football game.
Yeah, and when you shared this on the other social network, you basically closed with the statement, "This is what investing is all about." And I really think you're right on here. I mean, what a memory. You guys are going to be talking about this forever.
Oh yeah, till he takes his boy there.
Yeah,
to something like that. My memory in 1992, and I was a college student at the time, but my dad sprung for tickets for my family to go to the Final Four. Was in Minneapolis, which is near our home stomping grounds, and was when Michigan had the Fab Five freshmen. So I got to see them live as a student at the time, and
wow.
Yes, absolutely vivid memory still.
Good stuff. All right, so again, this is what investing is all about. Anything else you'd like to add, Ken or Kim or Len?
No, that's a great ending to the to the session today, Mark. I do want to alert folks to our Ticker Talk that's coming up on Thursday. Ticker Talk will be at 8 o'clock Eastern Time Thursday. That's a half an hour earlier than the normal time. And in fact, it will be the time for Ticker Talks going forward. And I'm going to continue talking directly to novice investors and to people that are just getting started in the investing field. And we're going to talk a little bit about finding ideas on the Better Investing site. And Kuniaz is going to join me, and she's going to have a lot of tips and tricks for places that you can find great ideas right from the Better Investing website. So again, 8 o'clock on Tuesday, and if you want to register, go to the BI website and it'll be on the homepage.
In the spirit of other reminders, we do have roundtable next Tuesday evening, 8:30 Eastern Time.
And if you can't find a way to get registered for the roundtable, again, a quick note to nkavula1@comcast.net. And my wife, Natalie, is getting really good now at helping folks get themselves onto the list. And if it's too late to make the list, she's very good at sending out a link directly to you so you can register. If you're not on the list, get on the list. We just want to let you know when we're running these kinds of programs. And we promise we won't be using that link for anything other than notifying you about Mid-Michigan / manifest investing kinds of activities that we're doing.
All right, Ken, so I did send a note to the people who actually do the Tubgate hot tub to see if they were taking it to San Francisco. I'll keep you posted if it's going to be available out there for
Sounds
for the
good.
game next weekend.
I don't need to be in it next time, though, okay? I could be standing next to it, all right?
All right, I'll keep that in mind.
All right.
All right, thanks, everybody. Take care.
All right,
Bye-bye.
bye-bye.